welcome to Looking at the Markets with David Modell. Today we're going to talk about Keltner channels, Bollinger Bands, and how we can use them, the right way to use them, and in my opinion, the wrong way to use them. So let's start out with just some examples so you can see what I'm talking about. And right now I'm using stockcharts.com, which as of today, August 24th, 2016, it is free to use. They also have it says they have a 10-day trial. So I guess they have pay services as well, but I'm just using the free features and they work really well for me. So you might want to try those out. Alright, so let's take a look at the Netflix chart. This is the daily chart. And the red lines are the Keltner channels on the standard settings, and the blue lines are the Bollinger Bands with the standard settings of 20 period and two standard deviations. So standard settings here for Bollinger Bands are 20 and 2. All right, and see these are not only the Bollinger Bands and the Keltner channels can both serve as indicators of overbought and oversold levels. But what's great about the Bollinger Bands is that they really can also be used as volatility indicators, or you can measure volatility with it. When the Bollinger Bands squeeze or contract, in other words, when the blue lines here, the Bollinger Bands get close together, that means that the stock has been moving sideways for a while. It has not been volatile lately. And when it starts to finally have some big moves, that's when the Bollinger Bands expand. All right, so you get a squeeze, and then oftentimes after the squeeze you get a release. All right, or a tightening and a widening, I guess you can call it that. Keltner channels are more subdued in terms of how wide they get. They stay, and I don't know if you can see it because there's a lot going on here, but if you can just focus your eyes on the red lines, which are the Keltner channels, you can see that they don't expand and contract all that much compared to the Bollinger Bands. And so you don't get as much of a reading, or you get a very subdued reading as far as volatility goes. You don't get much expansion and contraction compared to the Bollinger Bands, where you can see the expansion and the contraction very clearly compared to the Keltner channels. Now, if you want to know, all right, let's say you're looking at the Bollinger Bands and you want to know, when is a squeeze happening? When is a period of low volatility happening? In other words, how tight do the bands have to get before I can say that there's complacency or lack of volatility or a squeeze? Well, what you can do is go to stockcharts.com and go down and put on both the Bollinger Bands and the Keltner channels, and you can put them on their standard settings if you want to, like I do. And when the Bollinger Bands, both of them, are inside of the Keltner channels, that means the top and bottom band are within or inside of the Keltner channels, you can call that a squeeze. You can call that a contraction, and you can say, wow, right now the Bollinger Bands are really tight. And so there's complacency in the market, and especially in that stock price, and you can expect a breakout to happen at some point, maybe even soon. No guarantees, of course, but Netflix is a perfect example. At the point where both of the bands, the Bollinger Bands, came within the Keltner channels, right about here, and then look at that big move afterward. Okay, so if you had purchased a straddle or strangle right here, you probably would have done pretty well. All right, so that's just one example here. If we look at some other examples, we've got BlackBerry here, and we can see the Bollinger Bands. Actually, it's hard to see here, but both of the Bollinger Bands are within the Keltner channels right here, and they had a nice move right after that happened. Okay, So if you had purchased a straddle or strangle here, you might have, for a short-term trade, a few days, you might have done pretty well. The Bollinger Bands came within the Keltner channels right here, and nice move right after that. All right. Again, this doesn't happen every single time, but you can see a pattern here. Here's Ambarella, and the Bollinger Bands are both they both came within the Keltner channels right about here, and had a nice down move right after that. If you had purchased a straddle here or a strangle, you might have done pretty well. You got a nice move out of that one. All right, and then one more example. This is X, which is U.S. Steel. The Bollinger Bands came both within the Keltner channels right about here, and you got an up move there. You would have done well for a short-term trade. If you made a volatility play here, buying a straddle or strangle, for example, and the Bollinger Bands both came within the Keltner channels here, and you had a nice down move right after that. So those are just a few examples. It does not happen like that every time. It is possible for the Bollinger Bands to be within the Keltner channels and to continue going sideways for a while. That does happen. But if you're going to count on volatility picking up, or if you just want to know, when, what is a Bollinger Band squeeze? When should it be considered a squeeze or a contraction? That's one way. That's one indicator when both of the Bollinger Bands are within the Keltner channels. So if you'd like more assistance with technical indicators, with stocks, options, or just putting together a trading plan, if you don't have one, then you really ought to have one. By all means, you can contact me at any time. My name is David Modell, and my email address is davidmodell@gmail.com. Last name is spelled Moadel. And if this video was helpful, or if you just like it, by all means, please give it a thumbs up on YouTube. You can leave a comment. I enjoy the comments. And subscribe to my channel so you can get first access or first notification of when I come out with more educational content here on YouTube. All right. So I hope this was helpful, and feel free to contact me anytime. I hope to hear from you soon.